everybody. In this video, we will start the discussion of translation of foreign financial statement. What's a translation? Why we need a translation? What's the importance of a translation, etc. And how we translate the financial statement. What are the methods of translate the financial statement? All of these points we will discuss it in this video and in the coming videos. In this video we will discuss or start to discuss the first three objectives of this topic. We will define the functional currency and factors suggesting the functional currency, how we determine the functional currency, and before that we will discuss what's functional currency or what functional currency is. And then we will move to discuss the objective of the translation process, why we need to translate the financial statement, and then we will move to discuss the functional currency translation process to trial balance and calculate the translation adjustment. How do we calculate the adjustment? Now let us start by the first two objectives. Now the point is, here or nowadays when we are talking about globalization and multinational organization, we are talking about, for example, company located in the US and they have many subsidiary companies located in different locations around the world, such as, for example, HB. We discussed this example before, but just only kind of reminder or reminding. Here we are talking about, for example, company located in the US and they have subsidiary or affiliated company located in the UK, in France, in Japan, China, etc. Also here we are talking about another example when we talk about, for example, a company located in Palestine and they have a branch, for example, in Egypt or in Jordan, whatever. So the question is, how can they calculate or how can they prepare their financial statement? Here our company located in Palestine and we have affiliated company in Egypt, or we have joint venture, or we have a branch, or we have any kind of investment any kind of investment located in another company. The point is, our affiliated company will prepare the financial statement, will prepare their financial statement by the functional currency they decided to adopt it. Also here in Palestine, for example, we will prepare our financial statement by the US dollar or by the Jordanian dinar, and the affiliated company mostly located in the Egypt will prepare their financial statement by the Egyptian pound. So the question is, how can we prepare our consolidated financial statement? As we have a branch or subsidiary or joint venture located in somewhere else than our domestic company, our country, so they will prepare their financial statement. Mostly they will prepare their financial statement by the currency of the country which they located in. So this is our point, how we will make decision, how we will read the amount of income, how can we understand the amount of assets or the amount of liability, etc. How can we understand the financial statement? This is one of the objectives of translate the financial statement. And how can we prepare the consolidated financial statement? This is the most important point. Here we located in Palestine and we prepare our financial statement by Jordanian dinar, and our affiliated company that located in Egypt prepare it by Egyptian pound. So they gain, for example, they earn amount of income by 1 million Egyptian pound, and here we earn income by 100 or 1 million Jordanian dinar. So how can we prepare consolidated financial statement? You have to add the income earned in Egypt by the income earned in Palestine and to figure out the amount of income in total. So can we add 1 million Jordanian dinar to 1 million Egyptian pound and say we have income by 2 million? No, impossible. It doesn't make sense to add 1 million Jordanian dinar to 1 million Egyptian pound. So this is the point. First of all, before we prepare the consolidated financial statement for our affiliated company, or before we make a decision, or before we where we read the financial statement of the company located in Egypt, we have we have to translate it. We have to change the expression of the financial statement from Egyptian pound to Jordanian dinar, converting the financial statement that prepared by the Egyptian pound to express it by, or to disclose it by, Jordanian dinar. This movement, or this converting from Egyptian pound to Jordanian dinar, we call it foreign currency translation. How we translate, how we convert the financial statement that is prepared by the Egyptian pound to financial statement disclosed by Jordanian dinar. This is, we call it foreign currency translation. Convert the financial statement from Egyptian pound to financial statement disclosed by Jordanian dinar. How we disclose, or how we convert the financial, how we translate it, we obligated here in Palestine to adopt international financial reporting standards, IFRS, and International Accounting Standard number 21 has the detail of how we translate the financial statement, or how we convert it from currency to another currency. And under financial accounting, or under US GAAP, they adopt the financial accounting standard for statement number 52. Mostly there is no material difference between both of them, and we will clarify in the coming slides and videos how we translate the financial statement from currency to another currency. This is this process of restating financial information from one currency to another currency is called translation. But before we start to discuss, let us first of all determine what functional currency is. What does it mean? The functional currency, mostly the currency of a primary economic environment in which the entity generates and expends cash. Mostly here, for example, in Palestine, we use shekel. In Egypt, mostly they use Egyptian pound. In Jordan, they use Jordanian dinar. In the UK, they use British pound. In the US, they use US dollar. So mostly the functional currency is the primary economic environment in which the entity generates and expends cash. Now let us move to see what are the factors or circumstances favoring local currency as functional currency and favoring parent currency as functional currency. Now, mostly in normal situation, the functional currency is the local currency, because most of the cash flow in the primary in the local currency and do not impact parent's cash flow. For that, when the most cash flow, outflow, or any flow in local currency, and this flow, this cash inflow or outflow don't impact parents' cash flows, in this case we will in favor to choose local currency as functional currency. Otherwise, if the primary or directly the cash flow directly impact parents' cash flow, in this case we are in favor to choose parent currency as functional currency. If the collected cash or payment cash impact parent's cash flow, directly impact parent's cash flow, in this case we are in favor to choose parent currency as functional currency. Otherwise, when the cash flow don't impact parent's cash flow, we are in favor to choose local currency of the currency we are located in as functional currency. Also, the factors or economic factors that influence the choosing the functional currency is sales price, how we determine the sales price. If it is responsive to exchange rate changes, so mostly we will, or responsive to change in exchange rate, we will in favor to choose parent currency as functional currency. Otherwise, if we irresponsive, if we don't affect or we don't or if the exchange rate don't impact the or we don't affected by the exchange rate, in this case we are in favor to choose local currency as functional currency. And mostly if the expenses incurred in the local in currency, so we are in favor to choose local currency as functional currency. Otherwise it will be, or we are in favor to choose parent currency as functional currency. So mostly, by simple way, mostly the local currency is functional currency if we collect cash in this currency, in the local currency, or expenses primary in the local, we collect or pay it in the local currency, or where the sales price irresponsive to exchange rate changes and governed primary by local competition. So under these circumstances, mostly we are in favor to choose local currency as functional currency. Otherwise, if we responsive to sales price in according to change in the exchange rate, or where the cash flow impact parents' cash flow, in this case or under these circumstances, we are in favor to choose parent currency as functional currency. Functional currency is the currency we use to record our financial statement and record our transaction and to prepare our financial statement. Let us see some terms to support our translation process in the coming video. Here, functional currency again is the primary currency in which an entity does business, mostly as we receive cash and pay cash and we determine the selling price. So mostly this is the functional currency. Foreign currency translation we have discussed a minute ago. Reporting currency is the currency in which an enterprise prepares its financial statement, the currency that we use to prepare our financial statement. Translation adjustment, it's so important point, as we will translate or convert the items from Egyptian pound to US dollar or to Jordanian dinar. We will figure out difference between the amount and the translated amount as because of the changing of the exchange rate. This difference, we call it a translation adjustment, and depends on the approach or method we use, we will categorize it as period income or loss or as other comprehensive income. Okay, now let us see what's the point that we are going to discuss, how we translate. This is the our problem or our issue that we are going to discuss in the coming video. As we have trial balance, here we have debited account and here we have a credited account. We disclose this trial balance by British pound. Here we have cash by 220, accounts receivable, inventory, building, etc. In total, we have total debit 1,168,168, and on the other hand, the credit in total accumulated depreciation, payable, common stock, etc. 1,168. The point is how we will convert this amount, how we will translate this amount from British pound to something else, to, for example, Jordanian dinar, to Egyptian pound, to US dollar. So the question is how we, or the most important, or the issues associated with the fluctuating exchange rate or converting from currency to currency is how we will determine the exchange rate. This is most important point. What's the exchange rate that we are going to use? We will use the spot rate, the current exchange rate, or we will use the historical exchange rate, or we will use the average exchange rate. This is the point. What are the exchange rates we have to use when we translate the financial statement? Also, which foreign currency assets and liability are exposed to exchange rate changes? As we have assets, these assets denominated in foreign currency. Also, how can we determine the exposed to exchange rate changes? These are the issues that we are going to clarify in or where or when we discuss or when we discuss the translation process. Until now, it's enough. Let us move to the coming video. See you there.